Okay, so if you have watched the news at all in the past month or so, you've probably seen a lot of end of the world, the sky is falling kind of news. So, especially with people talking about like an upcoming recession, the Fed raising the rates, what's going to happen with housing and mortgage rates and all that. What have you been seeing on your end?
All right. So this is everything in the media is trying to get clicks or get views. And
Yes.
usually what that means is that they're going to say whatever is going to get someone's attention, and more oftentimes than not, that's fear. So the biggest thing that we're hearing is the Federal Reserve is raising rates, and it's the end of the world. The Federal Reserve the Federal Reserve rate, I should say, only affects lending between financial institutions overnight. That's essentially what the Federal Reserve rate monitors. That also affects the prime rate, which affects short-term debt. So we're talking about student loans, credit cards, home equity lines of credit. Basically anything that's a 10-year term or less, we're looking at the Federal Reserve rate affecting that debt.
Yeah.
Mortgage does not fall into that category. Even the shortest mortgage, you're usually looking at 15 years. There are 10-year fixed mortgages, but the key there is fixed. You're fixing the rate, and that's it. When the Federal Reserve rate is not going to affect those products. But it does have a correlation. So as Federal Reserve raises their interest rates, the whole point of that is to minimize the effects of inflation. As the Federal Reserve rate goes up, the key is inflation coming down. And inflation is the biggest enemy of mortgage rates. So we saw about 8.6% year-over-year inflation. That's why the rates are going up. Has nothing to do with the Federal Reserve. In fact, the Federal Reserve just raised their rate 75 bips, which is 0.75% in the most recent meeting, which I believe was on the 21st of June. Since then, where it's now July 11th, we've seen rates come down about 0.5%. So it kind of fits. We're seeing the Federal Reserve raising rates, which should bring down inflation. As inflation comes down, mortgage rates should come down. So even though the media would lead you to believe that these meetings and these Federal Reserve increases are going to negatively affect interest rates on mortgages, it's actually going to be a positive for mortgage because inflation should come down and mortgage rates should come down. Unfortunately, no one has a crystal ball, so we don't know when that's going to happen, but we're already seeing the real-time effects of that in the market already. So let's pray that we see some more, inflation fighting tactics by the Fed, and hopefully mortgages are back into the 4s and the 5s sometime soon.
So what you're saying, it's not the end of the world.
It's not the end of the world for mortgage. If you have a lot of credit card debt, this would be a good time to potentially maybe pay that off because those rates are going to go up. If you have any short-term debt or you're thinking about buying a car, you might want to act fast because those rates are going to go up. But for mortgage, it's not the end of the world.